Hey, it's Chris Lamm with Commerce Home Mortgage. Thanks for checking out our market update for the month of September. Again, I hope you and your family are staying safe and navigating these crazy times well. A couple topics we're going to touch on today. One of the big things that's come up lately is paying points. Over the last 5 to 10 years, it's not been a real popular thing for people to pay points or buy their mortgage down. So for example, if the going rate is a 2.75, maybe by paying 1% of the loan, in this case we'll say $3,000, they might be able to get that rate down 1/8% and save money. Right now, with rates being at all-time lows, we are seeing that the way that you can buy rates down, you can get down to lower rates, is appealing and very attractive to many people. And so I wanted to just touch on that briefly. When paying points, it's no different than any other net tangible benefit analysis, or looking at the fees you're going to pay for a refinance and asking the question, does it make sense or not? For example, if you're going to pay $3,000 to buy your rate down 1/8% and you're only going to save $12 a month, it could take you 8-9 years before you actually receive the benefit of that money you paid up front to get that rate down. And so it's really something you want to look at. The other thing that's really important is keeping in mind how long you're going to really stay on that house. It's the first question I ask everyone when they call us, whether they're going to buy a house, whether they're going to refinance, is how long do you intend on staying in that home? And my experience, and statistically speaking, most people stay in their home or stay in their mortgage much shorter than they actually intend when they buy the home, or when they do a refinance for that matter. So in a case where you buy the rate down and you're going to recoup that money in 7 to 8 years, if something changes and you and your family decide to sell your house in 5 years, you lost money. Or in another case, if rates go down even further and you decide to refinance your home again in a year or 2 years from now, you lost money again. And so you really want to take into consideration what the future looks like. No one knows what rates are going to do, of course, but in most cases, buying points does not make sense. That also is true for upfront mortgage insurance premium. Now, many of you that have bought a home that did not put 20% down, you're paying mortgage insurance, and there are options where you can pay it upfront in a fee instead of paying it monthly, which brings that monthly payment down and does save money over time. But there's been a lot of people this year that paid upfront mortgage insurance premium 1 year, 2 year, 5 years ago, and when they go to refinance today, they don't necessarily have enough equity to not have mortgage insurance, and they're going to have to get mortgage insurance on their new loan, which means the money they spent on the loan they did, basically they lost money. And so these are things you want to think about when looking at these two options. It's a very common thing to ask, should I pay points or not? Most of our loans right now, we're not seeing people paying points, and they're still seeing amazing rates, but it is an option you can look at. The last thing we want to touch on is just how the market is doing in September. Not to sound like a broken record, but we're still looking at incredibly low inventory. I think we were in the 400s in Shasta County. This is a nationwide trend. There truly is a housing crisis right now. And then we have a ton of people that are wanting to move out of the cities and into more rural and suburban areas, and Redding is not a stranger to that. We're seeing that happen here as well. So it's putting a lot of pressure on prices. We're seeing homes sell above asking price, and it's pretty crazy out there. You couple that with all-time low interest rates, and you've got a recipe for a super hot market, and we do not know how long this is going to last. Some say it'll be done after the election. Some say it could definitely run into next year. Here's what we do know is there are still good deals out there. You just want to make sure you're aligned with a real estate agent that's going to help you find them. And as far as interest rates are concerned, if you haven't looked into refinancing yet, you probably should. They're still at all-time low levels, and we have a lot of people refinancing. I heard a statistic that half of America right now is eligible for a refinance. So 1 of 2 people should and could look into refinancing. I want to thank you guys for supporting us through this time. I can't say it enough. The referrals we get from our past clients, from our friends, from our business associates, and people that have supported me all throughout the years, we're super grateful. We couldn't have done it without you. And because of you guys, we haven't had to lay anyone off, and we've been really busy during this pandemic. So thank you so much. If there's anything I can do for you, please let me know. You can call me anytime. And I hope you have a good September.